Well, good afternoon, everyone. I'm Jim D'Antona, CEO for the SLO Chamber of Commerce, and welcome to our weekly webinar dedicated to discussing the important issues for our community in dealing with this current crisis. We're really glad that we are able to bring you these important conversations that can help you work through these difficult times. As we put these webinars together, I think that our returning guest will not have much new to tell us from last week, but then something pretty big happens and those worries go right out the window. That big news this week is that Congress is poised to refund the stimulus loans that went on pause last week to the tune of $320 billion. Our returning guest is, of course, Judy Mahan, Director of the Small Business Development Center, and we're so appreciative to have her back. Today, Judy will be joined by part of the team from Morris & Garritano. Joining us from Morris & Garritano team is Director of Compliance, Keith Dunlop, to talk to us about some pitfalls for business associated with the Affordable Care Act. And joining Keith is Morris & Garritano's HR business consultant, Louise Matheny. She'll be sharing with us some best practices on communicating with your staff and what are some good ideas related to that to protect yourself. At the end of the presentation, we will go through as many questions from you, the audience, as we can. When you're writing your questions, press the Q&A button on the bottom of your screen and add your questions in there so I will be able to ask those of our panelists. I would also say be watching for those answered questions because we do have folks answering some of your questions in writing there too. Don't post your questions in the chat. We'll leave that for any potential links or information from our panelists that they want to share with you. But before we jump into the big news that Judy will be sharing with us, I do want to take a moment to recognize how much Judy has been doing for our community. I've seen her on no less than 3 webinars this week, and I'm sure there were more. And she and I were on 3 different Zoom meetings together just since this morning. I just really want to say thank you, Judy, from the entire business community for helping us understand all that's going on right now. With that, Judy, go ahead and take it away and bring folks up to speed on the latest news out of Washington regarding stimulus funds.
Thanks, Jim. Thank you so much. And it's been, we feel so incredibly lucky and honored and to be able to do the work that we're doing right now. It's very rewarding to be able to help as many local businesses as we can. So I'm gonna try and provide some updates. Let's start with the really big news, as you mentioned. There is a final vote that needs to happen this afternoon to confirm the additional funding that will be made available through the CARES Act nationally. So we've expended the first amount of funding that was available to fund the EIDL and PPP loans. The number has been fluctuating. The last number I picked up this morning was $484 billion being made available again to continue to fund these programs that have been put in place. Of that amount, $310 billion has been reserved for the PPP loan program, Paycheck Protection Program, $60 billion for EIDL, and of the $60 billion for EIDL, $10 billion is set apart for the loan advances. And as most people know now and understand, the loan advances are up to $10,000 per business, completely forgiven. It doesn't have to be paid back. And the way that amount's been calculated, each business can earn up to $1,000 per employee in the business to get that loan advance. So nothing's changed there. The funding, we hope the vote will go through today. And we're being extremely hopeful that the portals will be back up tomorrow morning. Today's Thursday, yes, it's Friday. So it seems like Friday's been a recurring theme. They opened up the EIDL program on March 13th on a Friday. The CARES Act went through, same thing, the couple of Fridays after that. So I have the feeling tomorrow's the day, but we won't know for sure until likely we wake up tomorrow morning. So, but for those of you who have been preparing, who want to move forward, just remember to log on to, actually, as soon as we're done talking, we also have online Kristen Meal, one of our lead consultants here with the SBA Loan Task Force group. Kristen has been phenomenal assisting so many local businesses and is here to answer questions directly. So thank you, Kristen, for being on board. And either Kristen or I in the chat box will share the link again for the EIDL portal so that everyone's ready to log on if tomorrow it goes live again. So in the meantime, I'm going to give you a quick update with a quick presentation here. Sorry, Dan asked me to be ready, and I was so ready, but when you're live, all of a sudden you kind of lose your capacity.
Down in the right, yeah, there you go.
So again, we're the Cal Poly Center for Innovation Entrepreneurship, the Small Business Center division. And there's 1,000 of us nationally available. We're funded by the SBA. We use SBA funding to help pay our consultants so that they can work with local businesses. So our ultimate mission is economic development. So this is especially when we're in a disaster management situation like we are right now. So we're here to help. EIDL and PPP, as mentioned earlier, should come back live, if not by Friday, at the very latest, we expect on Monday. Another interesting piece here is that we are expecting on Sunday, April 26th, to get some guidelines from the SBA. The SBA will be issuing some rulings, some guidelines. There's been many questions around exactly how to calculate the forgiveness portion of the PPP, and also how that loan needs to be expended over the 8-week period that you're authorized to spend down that loan. Lots of question, what accounting methods can be used, accrual versus, incurred. Can we go beyond the 8-week period? Does it start the minute you receive the funding? How does the deferment affect how you spend it? So many questions. So I want to reassure everyone, all the experts have the same questions as the business owners. Caliber Accounting, Glenn Burdett, we're talking with all the accounting divisions there, with CFOs. We're all confused. We will receive guidelines on Sunday, and we will share those guidelines first thing as soon as we get access to them. So if you are confused, it's normal, don't worry, we will get guidance by the end of the week. Another vehicle that I wanted to highlight today that we haven't highlighted in the past, anyone who has qualified for an SBA Express loan prior to COVID, there is the SBA Emergency Express loan that's available. So if you already have one under your belt, this one gives you immediate access, I think pretty immediate. I don't know what the dollar range is. I think it's 25K, might be more. But it's extremely fast. You're not in queue or in line as you are with EIDL and PPP. You can talk to your lender directly to access that vehicle, that resource. So something to think about if any of you out there already have an SBA Express loan in place. There are of course numerous EDD programs available to help manage unemployment issues. Unemployment benefits are happening. The 1-week period has been waived. The 1-week period to get access to your benefits has been waived. We touched on the Pandemic Unemployment Assistance Program, the PUA, last week. That program is going to become active April 28th. So that date is coming up fast, next Tuesday. So be ready to apply. This is for all, as a reminder again, sole proprietors, independent contractors, gig workers, anyone who previously was not entitled to unemployment benefits under UI, you now have access. You can get unemployment under PUA. Exact same deal as under the unemployment benefits. It's a 39 weeks of pay, 60% of earnings, plus an extra $600 a week for a certain amount of time. So that's new, something that business owners can access if they've decided to maybe temporarily shut down their business or permanently shut down until they transition to something new. And also we're here to help to try and help you figure out what is the best strategy on how to manage your workforce. Should they be put on furloughs, work share programs? Is it time to terminate your employees? Do some layoffs. so that you can allow them to benefit from what's available through EDD. So we're here to help on the strategy piece here as well. We have a great HR group on board. So here are our task forces. As mentioned, Kristen Meal, who's on the call right now, is part of our 10 consultant team to deal with the loan application process. But we also have very many experts on board available every single week through open office hours. They can help answer banking questions, accounting questions, HR, e-commerce. We're working with Jesse Dundon from Hathaway. He's quite a few of his staff is on board. They're taking on projects to help companies get online. For those of you who maybe have not had or don't have an online presence, maybe you've been a bricks and mortar retail space for a certain amount of time, and now it's time to kind of rethink your strategy and get online. So we have some bandwidth there to help you. And we also have now a team that's focused on our local downtown bricks and mortar, especially the restaurant businesses. What are the rules and regs that apply to you? How can you remain in business? What are, can you do curbside pickup? What are the rules around that? We can help answer a lot of questions there as well. So what's been happening so far? So we've worked with about 400 businesses in the last 5 weeks. It's been a lot, and I think we've been able to process requests pretty much within 24 hours. So if you contact us, we will get to you within a day and a half at worst case scenario. We are right just at the starting point of gathering information on the number of loans that have been issued to date and the amount of loans. The numbers I'm sharing here, 19 loans for about $1.25 million is extremely low. I think we definitely have had more than that amount come into SLO County. We're tracking, we're sending out surveys, we're trying to connect with our business owners to get better numbers, but they are happening, they're coming through. We've seen quite a few restaurants get some loans. On average, they are getting loans in the range of about 150K. So that's really good news. I know of at least 3 or 4 restaurants on the coast that have gotten those loans. So that's very encouraging. And we're doing a lot of webinars for sure. So if you want to sign up, be a client, get some assistance. If you missed the first wave of access to EIDL and PPP loans, there's still plenty of time to get in line and to sign up. Contact us at slosbdc@gmail.com. Again, that's slosbdc@gmail.com. And we'll help you manage that process. But be ready. I think tomorrow is the day when those portals will be back up. That's just me looking through the, trying to make the best possible estimate. But worst case scenario, I think we'll be up and running on Monday. That's it. Thank you.
Well, thank you, Judy, for that. That's extremely helpful. And as you know, we've been recommending anybody that contacts us, and maybe Kristen can throw it up in the chat channel, is the link to sign up to be a client with the SBDC, because I will tell you, I spoke to a prominent person in our community who had to file for the PPP program. Very effective, knowing what they're doing, and had to go through it 7 times to get the application finally done. Very smart person. So these are difficult things, as they make them as easy as possible, but there's still things that need help. And that's why it's great to have folks at the SBDC kind of help you understand, to make sure it gets done right, maybe the first time. And so thank you for all your team is doing. I know it's very helpful, and it's getting our folks there. And I'll just kind of share a little information off a survey we are doing. We've sent it out to and had 200 responses real quick. And we were looking at about, of just those 200 responses, 10% saying they've been funded, 10% saying they've been partially funded, and then another 20% saying they've gotten approval notices. So we know that they're out there and they're happening, and we're looking forward to making sure that our community is getting our fair share. So once again, thank you so much, Judy. I will now we'll kick it over to our Morris and Garritano team and talk to our Director of Compliance, their Director of Compliance, not ours, though we would be honored to have him, Keith Dunlop, to talk a little bit about something maybe that businesses aren't considering as it relates to the ACA and the Affordable Care Act. So Keith, if you could join us here and then give us a little preview and some information as to what companies can be doing.
Well, thanks, Jim. And I'm happy to be your Director of Compliance as well. So thanks for having us. We're happy to be here. It's great to have a chance to speak with everybody. I'm going to put up a short PowerPoint here if I can get this to work. And hopefully that is on screen for everybody to see. So my primary job at Morris and Garritano over the last 5 years or so has been advising clients about healthcare compliance, primarily with a focus on the Affordable Care Act. The end goal, obviously, to avoid the massive ACA IRS fines that are assessed on ALE employers, which are huge and can be catastrophic to a business. So why is this a concern now? Why is compliance a question when companies are faced with cash flow, employees? That's really the primary concern. The reason is because some of the workforce changes that are currently happening can potentially trigger these ACA employer mandate compliance penalties. And while compliance is not necessarily the primary concern of companies that are struggling right now, it's important to at least be aware of the potential risks. Get this to work here, hang on. There we go. We first need to understand who the ACA employer mandate applies to. It's ALE employers, applicable large employers. And those employers have two primary responsibilities under the ACA. One is to offer ACA compliant healthcare coverage to their full-time staff. And that means employees working 30 or more hours per week, not the traditionally understood 40 hours as full-time. And to ensure that that offer of coverage meets affordability standards under the ACA. So what is an ALE employer? Who's an applicable large employer? It's a company that has 50 or more full-time and full-time equivalent employees on average during the entire prior calendar year. And a full-time equivalent employee is essentially everybody who is not that 30-hour per week full-time employees. So it means your part-timers and everybody else who's not full-time. The important thing to keep in mind as we think about the current crisis is that ALE status is established in the prior calendar year. It's not established now. So if you were established as an ALE employer for 2020, based upon 2019 census numbers, you are still an applicable large employer, even if you have laid off the majority of your workforce. So that means that you may believe that because you've reduced your workforce to below 50 FTEs, that ACA compliance doesn't apply to you any longer. And it's important to realize that that's not the fact. Also, unfortunately, we have, with these different laws, different ways of computing how many employees you have. So it's important to know that the way you compute employees under the PPP loans versus ACA versus maybe to know if you're an FMLA covered employer are all different, and just know that there are those differences. Also, when you're trying to establish if you are an ALE employer, IRS control group rules apply. I'm not going to go into those in great detail because that could be the subject of a full 1-hour webinar just in of itself. They're highly complex Treasury regulation rules, but in essence, it means that if you have different business units with common ownership, you could be potentially tied together as a controlled group. When you're doing calculations for things such as ACA compliance, you have to aggregate all of those numbers if there is a control group. So why is this important? And it's really the penalties. It's all about avoiding ACA penalties from the IRS. There's two primary penalties. One is we consider the sledgehammer, the A-type penalty for not offering coverage to your full-time staff. It's currently for 2020, $2,570 multiplied by the sum of all of your full-time staff less the first 30, which means that if you are employing 100 full-time employees and you're hit with this penalty, you're paying $2,570 multiplied by 70, which is a very large number. It gets big very, very quickly. The other penalty is on the affordability aspect. So remember, the offer of coverage to your full-timers has to meet affordability standards. If you miss that target, it's a $3,750 penalty. But the good news is that's per employee. So if you miss that target on 2 employees, you're only paying that penalty on those 2 employees that you missed the target on. The other thing to remember that's not on this slide is that the trigger for all of these penalties is if your staff end up at Covered California. So if your staff gets subsidized coverage from the exchange, that's the initial trigger for these penalties. The thought is that if your employees are at the exchange and getting their insurance coverage there, that you've done something wrong as an ALE employer, and therefore the IRS will propose a potential penalty. Instead of being presumed innocent and then having them prove that you did something wrong, it's the reverse. The IRS assumes you've done something wrong, and then you have to prove that you are, you're compliant and not you don't have to pay these fees, in other words. So just by way of perspective, how these penalties can add up, just between the years of 2015 and 2017, employers that I've worked with have received proposed assessments from the IRS of over $1.3 million. And that's over about a couple of dozen employers that I've worked with that have received these proposed notices. So you can see it gets really big, really fast. The good news is none of those companies have had to pay out any money to the IRS whatsoever, but the IRS wants the money and they're going to go after the money where they can find it. One question that we're getting from companies that are cash strapped right now is, can we do something with our benefits strategy to help reduce costs? Can we adjust our cost sharing scheme with employees where they may shift costs more to employees and less on the company to help with that cash flow problem? The answer to that is maybe, but if you're an ALE employer, you do have to be aware of the cost sharing requirements under the ACA. For 2020, ALE employers cannot make full-time employees pay anything more than 9.78% of their monthly household income towards their share of the medical costs. And that's employee only. It doesn't include dependents, doesn't include spouses. Employees can buy up if they want to get a richer plan or if they want to add a spouse or dependents. It's just with regards to the employee themselves. So assuming an employee is making minimum wage, that works out to a little over $165 if you're using the IRS rate of pay safe harbor. And the calculation is here on this slide on how that calculation works. There's other safe harbors that are potentially available. This is not that presentation, but just know that if you're a company that's considering modifying your cost sharing on benefits, that this is a consideration if you're an ALE employer. And so lastly, it's really just a matter of being aware of potential unintended penalty risks. Employees that are on unpaid leave status can potentially maintain their ACA status and trigger penalties. Employers may be required to continue benefits for furloughed employees. This primarily affects employers using a look-back measurement system to determine who's full-time and who's eligible for benefits. This is usually industries such as hospitality, hotels, bars, and restaurants, and also agriculture. And in general, the closing note I would have is just be cautious about any benefit interruptions to your employees as you're making these decisions about layoffs, furloughs, you know, some sort of unpaid leave status. Just be aware of these potential issues as you're making those decisions. Reach out to us if you have questions. And so, Jim, that's really all I have for right now. I just want to also say in closing that Morrison Garritano does have a resource page on our website where we're putting this type of information. We have our recorded webinars on the website. We have the DOL's Q&A on the FFCRA there. And after I pass it back to you, I'll put that link on the chat, the chat or the Q&A, the chat area. And with that, I'll hand it back to you.
Thank you, Keith. Appreciate all your work and putting that together. And it's one of the reasons we wanted to bring that conversation here was because, you know, here's those key points you brought up about looking backward. It's even though you may only have 25 employees now, if you had 75 before, you may still be part of that and think that you've dropped off and could potentially face fines when you just weren't aware. And so I really appreciate you giving that kind of information and giving our employers that heads up, because especially with the hospitality where we've dropped a lot of folks or maybe furloughs and layoffs have happened, it's a good thing for them to be considering. So thank you so much. Now, I mean, in terms of talking about communicating with your employees and how to do that in an effective way and, you know, a way that could protect you. That's why we have our Morrison Garritanos. Again, I made it ours. I wish it was ours. HR business consultant Louise Matheny. You talk to us a little bit about how should you communicate as potentially you're getting new monies in. If you need to reach out to your employees, how should you be communicating? What's the standard maybe you should be holding? So Louise, thank you so much for being here today and sharing with our folks.
Thank you, Jim. It's great to be with you today. Yeah, getting a lot of phone calls from clients about plans to reopen and looking forward to reopening. So they're starting to reach out to their employees. And what they're finding, what they're telling me is that the employees are silent. They're not responding to their phone calls. They're not responding to text messages. And their suspicion is that they are quite comfortable, you know, receiving their unemployment benefit and really don't have a desire to return to work. So the employer is getting a little frustrated. And what I would suggest is that you make those attempts however you've been communicating with your employees, be it email or texting or phone calls. If you're not getting a response, then send them a letter and stating that we are making plans to reopen. We anticipate around this date. If we don't hear from you by this date, we will assume that you have voluntarily resigned. That way and you know, probably best to send that certified so that you know that the employees received the letter. And just wait and see if you hear from the employee. Indeed, you may not. So that may create other staffing challenges for you on a go-forward basis. I'm also hearing from some clients that they have work and they've reached out to employees and offered them and contacted them and said, hey, listen, I don't have 5 days, but I can offer you 4 days of work, and the employee's declining. And my understanding about unemployment benefits, if the employee's offered work, they're supposed to be responding to that and accepting that offer. So there may be, I don't know, but there may be some issues of UI fraud. And there are ways to notify EDD about those concerns. If you would like information about how to where to send that information to EDD, I can provide that with you. for you. So it's challenging times, as Michael Gunther said. It's a new abnormal, not the new normal, which I liked. We'll just continue to support our clients and our community as best we can, and here to answer any questions that you might have today, Jim.
Yeah, no, so thank you for doing that. And one of the things I think has come up and is in that kind of confusion status is when you have employees out in a furlough, you haven't laid them off, you're on furlough, but then you offer them work, they don't come back. Are you suggesting potentially that when you do those notices, when you're sending letters to them, again, knowing that all of this is really specifically dependent on your individual case and you should check with it. But if you've done all you can to bring somebody back to get the work, are you okay kind of moving on without them? Or how would you recommend, should folks talk to an employment lawyer before doing those kind of things?
Well, again, the furlough versus the layoff, there's been a lot of confusion surrounding that. And really, a furlough is a temporary reduction or elimination of hours with a return to work date given to the employee. That's the kind of the legal part of it. If you can't give them a return to work day, then really it's a layoff. And that then created, the responsibility of paying that employee the day that you laid them off and paying them all their vacation time. That's why some employers were saying, well, it's really a furlough because perhaps they didn't have the money to pay out that vacation. But at some point in time, the employee's not working, the employee's gone on and applied for unemployment insurance. And again, yes, they should check with legal counsel, but if the employee is not responsive and not returning phone calls and you've notified them by mail that you indeed anticipate to have work available on a certain date, it becomes a voluntary termination at that time that the employee has chosen to separate and not return, which again will then create other staffing challenges for our community. And it may be tough, and especially with the large volume of student workers that we have in this community with Cal Poly, and a lot of those students have gone home. So are they going to come back in town just for that job? Perhaps, but if there's no school, then they may decide to stay at home. So it's going to be a very interesting and challenging time for our community.
Yeah, it is. I loved what you said there about it, the new abnormal, because none of this seems easy to kind of deal with and figure out. I was wondering, and I don't know if you've had the opportunity to really dig into the Family First Coronavirus Relief, FFCRA. It took me a while to figure that one out. But is that something different than FMLA, or is it essentially the same as FMLA, but just applying to this new emergency? You have any thoughts on that?
Well, it's, and again, Keith, chime in, but it's different. It models the FMLA, but what's different about it is that it's paid. And typical FMLA, the 12 weeks, is unpaid. So yeah, it is different, and it's only for that reason. The 10 weeks of the FMLA is only for childcare issues. So it's not to take care of a family member like FMLA is, or to take care of your own, leave of absence for your own illness. So it is different, but it's mirrored on FMLA. So I think that's the reason they've used that same acronym. But again, it's another challenge and something else that an employer needs to learn about and deal with. And it's important because of the ability to get those dollars back from the government. It's important that employers have policies in place and request forms. So you may have to prove to the government that indeed this employee did request and EFMLA. And so you'll need a request form, you'll need documentation. It's very important that you have some kind of documentation that the employee qualifies for that leave.
And Jim, I'll just add a little bit there. So Louise is totally correct that it's a confusing aspect of the FFCRA, and what they did is it's an amendment to existing FMLA law. So it's not new FMLA. The only nuance, the only thing that's new is that this temporary addition to the existing law is now paid for those narrow specific purposes.
Great. Yeah, that's very helpful. So I appreciate kind of, these are all things, as you know, and the interesting part is we're talking about a lot of these things over and over, but, you know, and folks are like, well, I've heard this a few times, but some actually employers are now, you know, they were okay on March 17th, maybe they were okay on April 1st. And now we're here on April, you know, what are we, 23rd? And we are, you know, they're just getting into this. So appreciate you kind of maybe bringing back some of these things where that might be new for some of our members. And that's why we want to keep talking about them, because everybody's hitting new timelines in this kind of crisis.
Yeah, and if I could just say one more thing, you said something interesting about it being new for employers. One of the things about the new FMLA provision is that this applies to employers that may not have had any coverage under FMLA previously. It applies to employers below 50. And so this is entirely new to smaller companies that didn't have to deal with the normal FMLA.
Wow. I didn't know that, but that's, yeah, that seems something new if you're not even familiar with how to deal with that. So definitely check in with your HR professionals and making sure you're following these rules, because as you were talking about, Keith, in your piece, one of the things you don't want is to have survived the crisis, gotten through, and end up with fines and penalties that just kind of eat you out, you know, bit by bit, because, you know, these rules there's a lot going on right now. So we definitely recommend checking in, especially with our friends over at Morrison Garritano, and figuring out if these things make sense, and as a client, and having them help you kind of work through these things. So I'll jump into a little kind of Q&A here. We had some questions sent in, and Judy, I'll bring it back to you here. Folks were talking about, you know, the forgiveness part, as you talked a little bit about in your time on your piece, and that, but people are talking about, could they spend some of their loan and return and get that forgiven and then return the rest? So if you got approved for $350,000 and then wanted to only use 100,000 of it, is it possible to get that forgiven and then return the rest?
Well, there's no prepayment penalty, so yes, you can. That would be sort of a prepayment. You're paying back that loan that you're not using. So yeah, that's doable. The understanding right now, big picture, is as long as you spend within an 8-week period from obtaining the loan X amount, that X amount will be forgiven as long as 75% of it was spent on payroll and 25% can be spent on any other allowable expenses, including the interest payments on a commercial lease, commercial mortgage, utilities, and rent. So those are the big picture parameters around that. But there's so many questions on the exact manner of expenditure. Again, we'll find out more on April 26th.
Yeah, it's hard to keep all those dates, I'm sure. Does it matter if the employees have individual taxpayer ID numbers or social security numbers in terms of getting them hired back and getting forgiveness on the PPP, do you know?
So they're doing it they're tracking headcount and aggregate payroll amounts. So you can hire new employees. It does not have to be the same employees that you had hired, that you had in place prior to February 15. It truly is headcount, number of employees, and aggregate payroll amount.
So they're not considering what gets reported to Social Security as the payroll count. You're going to file those in your 941s or something like that. there's some form, I know, I think I have to sign it all the time, to report wages. That's where they're going to be using that almost as a report back for your backup, I think, right?
Yeah, but and they're not going to be matching up social security numbers with who you had in place prior to February 15th. So that should be fine. Yeah.
Right. Oh, and okay, so let's, I spent a little quality time in human resources, but don't want to assume I know this. So I'll go back to our expert, Louise, and think about, so for hiring an employee back after 3 to 4 weeks of being laid off, do all hiring forms need to be signed again like they're a brand new employee? I think I know the answer, but I'll see if
Well, that's a good question. Personally, I wouldn't. But, an attorney may say otherwise. The I-9 form, all the identifying information should be the same. I think I'd ask them, is your address changed? Has your emergency contact information changed, phone number changed, that sort of thing. But personally, in these crazy times, I just don't think it's necessary to have them complete a whole new onboarding set of forms. But, I take the more practical approach. An attorney may say otherwise. Keith, do you have an opinion?
I feel the same way. I especially in these times, I wouldn't think that you would have to recreate an entire personnel file for someone that's been gone for 3 weeks. You wouldn't do that for someone who's been on a temporary leave. Maybe reconfirm I-9 information, but I pretty much agree with that.
Yeah, I think that's where I would have gone with it too, is that practically all that information should be the same. And maybe if you got some kind of confirmation that all material stuff is, like you said, reconfirming the I-9 or something like that, you'd probably be able to say we've got all that. So thanks. Back to you, Judy. What, for a sole proprietor, I think it kind of falls under similar standards, but how are the grants loans calculated, and what does a sole proprietor exactly qualify for in those loans? Draws and all of those still count as payroll, correct?
That's right. All the draws, it's proof of payroll. So if you, as a sole proprietor, have made draws, they'll accept, or at least they were accepting under the first stimulus package, even just bank statements showing proof of transactions. So they were being incredibly flexible with that. And I just want to share, I got a great text here while we were online. One of our large local health and wellness companies got a $500K EIDL loan that just came through just now. So that was good to hear. Yeah.
That's awesome. That's great to hear. Good to share. So looking over to a question to Louise, and see if you have some thoughts on this regarding employees over the age of 65, was asked to also stay home. Are there rules that they would have to pay her 2 weeks of wages as well? Or people over that age, if you're putting them off and they're not going to be able to work from home and they've opted to stay home, are there any rules about paying the 2 weeks of wages, or is it simply a termination at that point? We finished and cut off?
Well, if the employee's 65 and you have no, well, really doesn't matter at what age, if you have no work for them, then it becomes a layoff. What we heard from a lot of employers at the beginning is that, and again, it could have been over 65, they could have been younger. They were just fearful and they just didn't want to come to work. They just don't, they're an essential employer, but they just didn't want to come to work. And then the question became, well, then now after April 1st, would they qualify for the expanded paid sick leave? And, does the shelter in place meet the requirements of that first requirement that I think they have 6 of them listed, that you have to meet one of them. And, you know, this consensus is that no, sheltering in place just because you're afraid, and rightfully so, you may be, but that's not the same thing as isolation or the requirement by a healthcare provider to quarantine, to self-quarantine. So in most cases, they wouldn't be, the employer wouldn't be obligated to pay them that expanded sick time.
Great. Yeah, thank you. It's and additionally, as I say through all of these, with all of what our panelists are talking about, definitely check in for your own personal with all the details, because something you think might not have been a key detail was a key detail of a protected class or something else. So yes. Yeah. Do not just automatically take these and go, oh, I'm good, and want to, you know, definitely get some feedback there directly on some of your questions of these. But these are good to kind of help, you know, hopefully frame some of that. If, as kind of part of that, if a person was part of an essential business and work was available, but because of the school closure, the employee is eligible, is that part of the FFCRA? 2/3?
Yes, if they don't have a daycare provider, or let's just say they did have a daycare provider and they were at home teleworking, but all of a sudden that daycare provider is no longer available. Perhaps it was a grandmother, grandparent, and they've all of a sudden become sick, and they're not available, and that employee has no daycare provider. They could now say, I can't telework, I need to stay at home and take care of my kids, and they would indeed be eligible for the 2 weeks of the expanded sick leave and then the 10 weeks of the expanded FMLA.
Excellent. Yeah, that's, again, part of those really, again, weird, abnormal times and trying to figure out all these pieces. Judy, I have a question here that is interesting. So if you applied in the first wave of PPP and were actually not successful, and when they did the math, it seems that some certain large businesses got a lot of the pot. Should people, could people reapply, or will there, if you were not chosen in the first batch, should you just know that that's probably going to be in the second wave the same, or is there a reapply idea?
No. If you got rejected for any reason, we've actually, I was informed, that was one of the questions I had for the SBA yesterday. You can reapply, absolutely, yes. And just as a reminder, PPP will be available all the way through until June 30th to apply to. You know, as we've seen, though, that was maybe hopeful thinking, because the funds have been distributed so quickly. The EIDL loan will be available also all the way through till December 30th. But, you know, same issue. If the funds are expended and no longer available, then it is what it is. Yeah.
Well, and I want to thank, we got Gabe Garcia, who just put in the notes here that while we've been on this webinar, it looks like the House has passed the stimulus bill. Certainly happy about that, and means we'll start to hear about when portals will open, hopefully in the the near future. And one of the things I would add that we're seeing in this to that question of, you know, getting it business to small, or getting the money to small businesses, I know there have been money put aside in this bill specifically to go through credit unions and other smaller loan operators to try, I think, to try and intentionally get some of that money down to the folks who maybe bank through the federal credit union or smaller banks. So to the folks out there wondering about, you know, if you're part of CESLOC or some of these others that have are SBA lenders, definitely try your way through there, because they're getting a defined amount of money put through their banks. Keith, question on, you know, the feds have done a decent job of giving people extensions on some of the requirements, IRS. Do you think any of the ACA requirements will be deferred for 2020? Have you heard anything about that?
I haven't heard anything, and actually, I think if anything, it would be the reverse. I think the IRS would put additional scrutiny on ALE employers and what they did during 2020. If they did have staffing changes, furloughs, layoffs, if they're a company that's using look-back measurement to know who their full-time employees are, they're going to look at that very, very carefully. And when companies file their 1095s and 1094 forms next year in January 2021, I would caution to make sure that those documents are filled out accurately. If you have a vendor working with you to do that, whether it's a payroll company or somebody else, check the vendor's work, audit what they're doing. If you're a client of ours, that's something that I do. I'm happy to audit that information for you. So the short answer to the question is, I don't think so, no. Be prepared for additional scrutiny in 2020.
Great. And so one of the things, and I'm not sure if anybody had this answer, but it's an interesting question. If you offer an furloughed employee partial work, do they still get unemployment, especially the federal 600? If so, how much? But what I found, and I'll just preface this with it, is anything related to the EDD has been a mystery, and very few people have been able to solve that answer, find the answers to that. But I don't know if Louise or anybody has heard about that.
Well, Jim, yeah, you can qualify for partial UI, but again, it depends on how much, when you go back to work, how much you're earning. So I'm finding this with some of our higher paid employers, and clients, that their employees they cut their employees to 2 or 3 days a week, but even with those 2 or 3 days, they were still making more than 450, which at that time was the maximum UI. So they were disqualified for UI. So what they decided to do was have a certain number of employees work 1 week and then take the next week off, and then, leapfrog, so that they could claim a full week of no wages, no compensation. And then that should then help them qualify for some UI. The other thing that I don't think I mentioned this earlier, I'm hearing that employees have received confirmation that they are qualified for unemployment. They've been awarded unemployment, but they haven't received that debit card. So that is an issue that seems to be some kind of hang up up in Sacramento, and we're trying to alert Monim's office and Jordan Cunningham's office. And indeed, I've given them this particular group some information about EDD and who to contact at EDD as well. So that may be a hiccup that some of your employees out there are seeing happening.
Yeah, thank you. Again, these are such interesting times, and getting to especially the answers as it relates to Sacramento, EDD, I've heard from, and I know you and many others in the industry, like, yep, you have to reach out to the EDD, and it's very difficult to try and get a hold of them. So for everyone out there who's having trouble getting a hold of the EDD, even the people who know exactly where to go are having trouble getting a hold of the EDD. Yeah. And they're the only ones with the answer. And so I know we're coming down to the last few minutes here, and I have a question here, Louise, actually, that you can maybe help me with. And I'm going to put 2 of them together just because I think they come together. And talking about updating company handbooks, and as we go to show up to the workplace and the official kind of reopening of the economy, obviously we have a lot of people who are very sensitive to the idea of is this an okay time for my health? Am I, going to be putting myself at risk if I'm in a retail place or any of these things? Are there things you would recommend folks look in putting in their company handbooks around sanitization, sterilization, or any of these things that would help potentially mitigate potential legal problems from doing this?
Well, actually, it probably would belong in their injury illness prevention program, their IIPP. And certainly, yes, I would recommend that employers monitor the CDC website on a daily basis to see what requirements are being listed. They also may want to look at Cal OSHA to see if Cal OSHA's made any updates. But when they bring employees back, I certainly think they need to have the personal protective equipment available. So if face masks, gloves, wipes, anything, especially if an employee requests it. If you have an employee that is somewhat fearful, you need to assure them that you'll have these resources available to them. And, you know, you'll do whatever you can and to make the workplace as safe as possible with, you know, sanitation procedures. We're having our office deep cleaned. I mean, all those good things are happening. And then when I would imagine when we start to bring the workforce back, there'll be all kinds of resources available to our employees if they request it.
Excellent. Yeah, I think it's going to be an interesting issue in making sure employers, as we start to reopen, start to think about these things. I'm going to sneak in one more question for Keith here, and maybe he has an idea. It comes from one of our panelists last week, so if she doesn't know it, there must be a need to know this. So have they provided a formula yet for determining full-time employees?
If this is Kathy, I'm going to defer.
It is Kathy.
I think, Kathy, you're talking about the FTE calculation for the PPP loans, if I believe.
Oh.
Because the FTE calculation for ACA, that's been locked in for 5 years.
And it will stay the same in this?
It'll stay the same, yeah.
Okay, then I'll click over to Judy and see if she has information on this one. A formula for determining full-time employees, or is that coming out in the guidelines coming out soon?
I would imagine that would be in the detailed guidelines. I don't have any information. So yeah, we'll check on that. And
so the detailed guidelines are coming out, I think you said?
We were told April 26th.
Right, okay, excellent.
And if the question is about ACA, give me a call, we'll talk about it.
Okay, I was thinking about it for ACA, but you're right, it could be on the PPP loan. And again, all of these definitely are going to have a lot of discussion. And as the guidelines come out from the from SBA on the details, that'll certainly be key pieces that we're going to need to kind of dig through. So let me just close this out by once again thanking all of our panelists for taking the time out of their really busy schedules to be with us today. And just to let the audience know, we'll get a recap of the event out with answers to some of the Q&A we didn't get to. And one more note, join us on the Slow Chamber Facebook page as we start a brand new event tomorrow at noon. We are calling Working Lunch, where I'll be having a Facebook Live half-hour, kind of a more informal conversation with people doing interesting things in our community. Our first conversation will be with our Executive Director for Leadership Development, Dan Ravar. We feel this is an important piece of the community connection that has been missing since we can't be at events together like this morning, a Good Morning Slow. So for those of you who've made it this far, a note, Good Morning Slow will be making a comeback virtually next month. So we will have a whole program set up for you. And we thank you so much for being here. We thank our guests, and we look forward to next week when we have more of these conversations with all sorts of new information. Thanks for doing it, everybody.
Thank you, Jim.
Jim.
Stay healthy, stay well.